Hi, this is Hugh Johnson. Obviously, it's an important time that we talk about what's going on in the financial markets, going on in the U.S. economy, what's going on in the global economy, to try to get some idea as to what the events of the last few days, starting with the vote in Great Britain, in the United Kingdom, and what it means for the economy of the United Kingdom. For that matter, the economy of Europe, the global economy, and of course the economy of the U.S., and importantly earnings. And what does it really mean for stock prices, and what should we do in portfolios? It's very hard. We're in the process, like everybody else, of trying to quantify exactly what this means. Nobody knows for sure, but I think the best I can get to right now is that forecasts for the United Kingdom economy for 2016, 2017 are going to come down some. They're going to come down from roughly the 2% consensus forecast for how that economy will do to roughly 1.5% for 2016. That's important because obviously the UK is an important export destination for the US. So we do a lot of business with the UK. Not as much as you might think, but nevertheless a lot of business. $54 billion in exports to the UK. That's a pretty big number, but when you put it against a $16 trillion economy, it may not be all that big. And of course, we're not going to lose all $54 billion. We'll trim a little bit of that, but not a lot of that. Nevertheless, to some extent, not only will the UK economy be affected, but the US economy will be affected, and to some extent, a minor extent, US multinational companies, the companies that do business with the UK, will also be affected. Again, I think we, like everybody else, and our advisors are going through this process of trying to really harden up the analysis to quantify exactly what's going to be the impact on the U.S. economy in particular and earnings. And there will be some impact, but it won't be nearly as big an impact maybe as the markets seem to suggest with the first knee-jerk reaction of down 600 points in the Dow Jones Industrial Average. In a very important way, I think that, like we see at the beginning of every sort of thing like this, you see a knee-jerk reaction, and the knee-jerk reaction tends to overstate the significance of the economic or political event that occurs. But it's not to say that it doesn't have some significance. It does have some significance. And as I say, we've been going through the process of trying to harden up the analysis to quantify the impact. The one thing you don't want to do in a period like this is to get caught up in the day-to-day swings of the markets. You don't want to ignore them, but you don't want to get caught up in them. You don't want to have the very sharp decline in stock prices, very sharp decline in interest rates lead you to make investment decisions which might not be in your best interest, and we're not going to do that. So we're waiting for the markets to stabilize, which I think they will do, obviously a somewhat lower level than we saw in the middle of last week, but we think they'll stabilize, and then we'll start to be able to, again, really harden up the details to understand, to quantify the impact of the events that have occurred in the United Kingdom and in Europe, to quantify the impact on the U.S. economy and earnings. I don't think it's going to be that significant. What we're talking about is perhaps U.S. GDP growth is going to be a little bit lower than the consensus or we had forecast for 2016, 2017. The consensus has been about 1.9% growth in the U.S. A lot of that's because of the very poor first quarter, but 1.9% growth might come down to, say, 1.7%. And then the consensus forecast for 2017, 2.3, that might come down to, say, 2.2 or 2.1. That gives you a little bit of a sense of the magnitude of these events. Again, we expect the markets to stabilize the next day or two. We'll go through the process of looking at the numbers, real detailed numbers, and to try to measure what they mean for the U.S. economy, earnings, and most importantly, stock prices. We started this whole process thinking the stock market, as you all know, was a little bit pricey or overvalued. We were overvalued at the end of 2015. We came down to a level that was undervalued, and now we're back to a level, or we were back to a level that's overvalued. Even though we came down sharply on Friday, we'll go down a little bit more today, we're still probably a little bit pricey or overvalued. So it's really not the opportune time to be maybe lifting our exposure to the equity markets or thinking hard about the fixed income markets. We want to see some stability. I think we'll see that stability, and then we'll go on to making some important decisions, particularly with our eye on the fact that we're a little bit pricier or overvalued. We're watching this every day. I know how concerned you are. If you look at the markets, you should be very, very concerned. But let me state, and importantly state, the most important thing, and that is, look, I think these markets, as I've seen so many times in the past, starting with 1987, you name it, overstate the significance of the events that have transpired. And I don't think you should get caught up in the day-to-day or those certainly one-day swoons of 600 points in the Dow. It, again, overstates the significance of these events. It's not that they aren't important. They are important. We'll quantify the importance, and we'll make sure we manage portfolios to effectively manage our way through this whole process. I know it's easy to get caught up. I know it's easy to become alarmed by this, but believe me, you shouldn't become alarmed. We're not getting alarmed. We're trying to go about this in a very rational, sensible way. We'll continue to do that. And again, thanks for the confidence you show in us. I think that confidence is very well placed. And on an ongoing basis, this week, next week, I'll try to keep you apprised of what we're learning as we go through this very, very interesting but very obviously difficult period of time. This probably says more about political events that are transpiring in the world, the United Kingdom, the U.S., than it does about economic events, although the economic events, as I've said over and over again, are of some significance, but not as much significance as the markets seem to indicate. If you have any questions, call me, call Dan, call anybody at Hugh Johnson Advisors. We'd be happy to talk to you more about it. And again, over the next few days, we'll give you more information as to what our thinking is. Thanks very much. And again, thanks for your confidence.